All right. Welcome, everyone, to another deep dive.
Yeah, always exciting to be back.
Today's February 19th, 2025, and oh boy, are the markets jittery.
Jittery's an understatement, I think.
Haha, no kidding. Lots going on. We're
It's
diving into my pensions advisor's latest market update.
always a good source for this kind of stuff.
It really is. So, what's the theme here? What's got everyone on edge?
Well, we've got the usual suspects. Trade wars still brewing,
Oh, always.
the Russia-Ukraine conflict still simmering away.
Right. Doesn't seem to be ending anytime soon.
And then on top of all that, everyone's waiting with bated breath to see what the U.S. Federal Reserve is going to do.
Ugh, the Fed. They always keep us guessing. It's like a recipe for what, market chaos?
Pretty much, yeah.
Okay, so let's jump right in. We got to start with Asia, right?
Makes sense.
Markets are down, but here's the weird part. Chip makers are actually rallying.
Huh, interesting.
Yeah, it's kind of strange, right? These are the companies that basically makes the brains of all our devices.
Right? Our phones, computers, everything.
Exactly. So shouldn't they be down too with everything else?
You'd think so, yeah.
What's your take on that? What's going on there?
Well, I think it comes down to investor psychology, really. You see, the chipmaker rally, sure, it's interesting, but the bigger picture is the fear of a global trade war.
Yeah, that makes sense.
And Asian economies, they're really reliant on trade. So any kind of disruption there hits them pretty hard.
Right, right. They're kind of on the front lines.
Exactly. And that fear, that kind of overshadows any positive news, even something like a chipmaker surge.
So the fear is just outweighing the good news, even though it's there.
Yeah, that's about right.
Okay, and of course we can't forget about a conflict in Ukraine. Still drag it on.
Still a huge factor, absolutely.
Just adds another layer of uncertainty to everything, right?
Big time. It makes investors nervous. Nobody likes uncertainty.
So, okay, if I'm hearing you right, even though the overall Asian market is down, maybe individual chipmaker stocks could be worth a look.
It's possible. Always good to do your research, though.
Oh, absolutely. Never jump in blindly. Okay, so Asia's a mixed bag. Let's move on over to the U.S. market.
Sure.
Seems to be mirroring a lot of that anxiety we're seeing in Asia.
Definitely some parallels there.
What do you think about the Fed's role in all this? I mean, everyone's waiting to see what they'll do. And then you've got President Trump potentially throwing in some curveballs with policy shifts. It's a lot.
It really is. The Fed, they're in a tough position right now. If they raise interest rates to fight inflation, they risk triggering a recession.
Yeah, nobody wants that.
But if they keep rates low, well, then inflation could spiral out of control, and who knows what that'll do to the markets.
It's like a lose-lose situation.
In a way, yeah. And the markets are on edge because either decision could really shake things up. Then you've got President Trump.
Oh, yeah, I can't forget about him.
He could totally throw a wrench into things with new trade policies.
Like, what kinds of things are we talking about?
Oh, tariffs, quotas, really anything's possible.
And he's not exactly predictable, is he?
Not exactly known for his consistency, no. And that unpredictability, it just makes investors even more nervous.
I can see why.
It's tough to plan when you don't know what's coming next.
So back to the Fed for a second. It just seems like raising rates would absolutely tank the market. What's the smart move for investors right now?
Honestly, diversification and patience are going to be your best friends.
Okay, so don't put all your eggs in one basket.
Exactly. The U.S. market is probably going to be volatile for a while, so having a diversified portfolio can help you manage that risk.
Spread the risk around.
Exactly. And remember, reacting emotionally to every little market swing, that almost never ends well.
So stay calm and ride it out.
Pretty much.
Got it. Now let's hop across the pond to the UK.
Okay, good idea.
Their market seems to be in the same boat as the U.S., everyone fixated on the Fed and what's happening in Ukraine.
Yeah, definitely seeing those same anxieties playing out.
But is there anything unique about the UK situation that we need to pay attention to?
Well, the big thing to remember is that the UK is still dealing with the fallout of Brexit.
Right, of course.
Leaving the EU has totally changed their trade relationships.
Yeah, for sure.
And that makes them potentially more vulnerable to any kind of global disruptions.
So they're kind of out on their own now.
In a way, yeah. And for you as an investor, what's really important is how Brexit has made the UK more susceptible to supply chain issues.
Ah, I see what you're saying.
Which means companies listed on the UK Stock Exchange, well, they might be a bit riskier right now.
Interesting. So just to recap, we've got these interconnected markets all over the world, geopolitical hotspots that are making everyone nervous, and then major players like the Fed and President Trump making moves that could have ripple effects across continents.
You got it.
It's a lot to keep track of.
Yeah, definitely a complex landscape.
And that kind of leads us to our final thought for today. In a world where everything's so interconnected, where a policy change in one country can set off a chain reaction across the globe, how do we even begin to plan for the long term?
That's the million-dollar question, isn't it?
It really is. And it's something I hope all of you listening will think about. Does all this make you rethink your own investment strategies, or are you holding steady? It's a lot to consider. Thanks for joining us for this deep dive. Until next time.
See you then.
Bye, everyone.
Bye.